I'm Charlotte McLeod with investingnews.com, and here today with me is John Kaiser of Kaiser Research. Thank you so much for being here. Great to have you as always.
Charlotte, thank you so much for having me on your show.
Really good to be catching up with you. I think we've got a lot to go through. Where I thought we could begin with gold. So definitely we've seen the price on the rise since we last had a chance to talk about a year ago at this point. I'm wondering if you can begin by pulling out what you see as the main drivers for gold right now.
Okay, first off, February 2024, which I think was before when we last talked, that was the turning point where gold went on this sustained uptrend. It's now bouncing between $3,200 and $3,400. If you take 1980 gold at 400, inflation adjusted to the present, that it's up over 100% in real terms. This is a really big deal for the junior sector. Back in the 70s, it was a 400% real gain when gold went from $35 to $400, and that made a lot of high-hanging fruit suddenly low-hanging fruit, which is why we had a bear market for gold for the next 20 plus years. But what's really interesting about this drive is that the Western markets have not participated. You look at the GLD Gold Trust, and it's gained maybe 2.9 million ounces this year so far, but most days it's down or going sideways. So you have not seen the sort of North American investor community participate in the purchasing of ETF gold. I personally think the driver has been foreign countries, secret banks, central banks secretly buying gold. What has been disclosed is peanuts in terms of the grand scheme of things. And in the absence of the kind of craziness we saw in mid-2020 when gold first charged through $2,000, the GLD did really well. We are not seeing that validation at all. So it is a big mystery who is buying all this gold. And I think it is the rest of the world, probably even sensing in 2024 that there might be a Trump administration coming, that has been quietly loading up on gold. And what we are going through is, I think, a fundamental repricing of gold, and it's $3,000 plus onwards. But the market seems to think that it's going to crash back below 2,000, because you look at all the metal rallies we've had: silver, lithium, palladium, cobalt, all of them go way up. Everybody gets really excited, and then it always crashes back. But gold is in a completely different category. It's not driven by usage, supply and demand. So I think what we're seeing is the world preparing for a post-American world order, where since 1945, the United States cultivated its role as the hegemon, controlling everything. The United States, under the Trump policies, is withdrawing from this role, and the rest of the world is preparing for a post-American future.
This is really interesting, and we've got a lot of directions that we can go down here. I wonder if you can talk a little bit more about this lack of belief, at least in the West, that this gold price rally is going to last, because I kind of feel that too, and I'm wondering why you think people feel that way and what might change that.
Well, it's kind of been this cry wolf syndrome. The gold did really, really well in the early part of the last decade, after the financial crisis in 2008, made it to 1850, but then crashed back all the way to 1150. And then it turned out all the M&A that had been going on, it was misguided. The costs caught up to the high gold price. And when the gold price came down, all these projects were underwater. CapEx was blowing through the roof, and there was a lot of misery. And I think the market became quite disgruntled about the gold producers. And I think one of the things that has happened with the gold producers is that the market stopped treating them as a leveraged proxy for the price of gold. And I created a gold producer index in 2020 with about 50 of producers producing more than 100,000 ounces per year. And you could see, I started them at the same, but they disconnected. The gold producer index has actually been lower than the the gold trend line, starting with that same price on the 1st of January of 2020, except for one brief period in the second half of 2020 when it first charged for 2,000. Only recently are they almost even. And I think we're finally starting to see the market, at least with the producers, coming around to the idea that, oh, this gold price is not going down. And we're starting to see the incredible cash flow. You know, they're selling gold at the spot price of gold. They're not hedging it anymore. And even if they try to hedge it, the hedge price shows that by 2030, gold's going to be $4,000. So the futures market is not telling us gold is going back below 2,000. But the M&A activity is between producers. It's not really yet happening down the food chain. For example, one of my top picks is Vista Gold Corp, which if you run the numbers at the current gold price from their feasibility study for both the 50,000 ton per day scenario that they published in 2024 and the most recent one for 15,000 tons that they published, the stock's sort of languishing at about $1 per share when it should easily be $5 to $10 on an NPV per share basis for a permitted, shovel-ready project. So when you go down the food chain, there's a unwillingness to price, but we're starting to see the producers, especially the mid-tiers. And that's where the most excitement is. As that gold producer index is mainly driven by the, not by the Newmonts and Barricks, but by the Agnico Eagles, and which is pretty much a big producer already, but all the, the Alamos Gold, all these other ones, those are doing really well. And I think we'll see those ones start doing M&A of the development ounce in the ground companies. The ones like Vista Gold are quite advanced. They've been working on this for 15, 20 years. They spent $100 million getting this to the point where all the problems are solved. But there's lots of others that were discovered in the past cycle where, their PEAs ended up being not worth anything. The market is not yet really embracing them. It's peculiar. In 2020, when gold shot up, these all went up. A ton of money flowed into them. This has not happened yet. So I think we're in a very special moment, and all you need to do is believe that gold is not crashing back below $2,000 to load up on these stocks and be set to make 5-10 times your money. Not so much from the producers anymore, but from all the ones with the ounces in the ground.
Well, and just to add some context there on your outlook for the gold price, where do you see it? We can talk about where you see it going in 2025, or we can look at beyond that if you like, just for the gold price.
All that gold needs to do is nothing. Just stay here and let the market catch up. And some people might argue, well, gold is anticipating all sorts of inflation, and it's just going to sit here when suddenly inflation soars again, and the CapEx and OpEx all climb up, and all those economic studies that, with Vista Gold, show that they're way in the money. Well, not anymore, because as happened in that 2010 to 2016 period, inflation caught up to where gold ended up settling at $1,200, $1,300. I don't think this is going to happen. I think if we get new inflation, it's going to add to the gold price. And back then, globalization was still the big thing. Now we have an anti-globalization movement, and with the United States using its US dollar and its biggest economy as kind of a sledgehammer to bully everybody into submission, the rest of the world, I think, is looking at drawing away from depending on the U.S. economy. And when you think about it, 80% of the U.S. GDP has to do with services, only 20% with goods. So how much goods does this $30 trillion economy of the United States really going to buy from the rest of the world? And that means moving away from the US dollar. And things that we saw, like firing the messenger who gave us the bad jobs figures from the revisions from May, June, and the slow figures for July, and coming up with this preposterous story that somehow the person who assembles from hundreds and hundreds of data pieces and somehow falsifies it and then firing this person because it's not what you want to see. The rest of the world's looking at this and saying, the United States is becoming absolutely unreliable, untrustworthy in every way. Now, they can't escape the US dollar, but when it comes time to refinancing all those treasuries that are coming due, there's going to be a lack of appetite. And I think as these treasuries get paid back, as they reach the end of their term, that money, I think, is going to go into gold because nobody's really ready to buy the Chinese renminbi. Yes, the euro is benefiting, but Europe has its own problems, and the United States has definitely declared war on Europe. And with the Ukraine-Russia situation, that doesn't look like it's going to go in favor of Ukraine. And when Ukraine falls, Europe is basically the next target for Russia. So Europe, thankfully, is finally waking up and stop being a parasite on American protection and starting to pull themselves up by their bootstraps up. But gold, I see it drifting higher. I can see it taking a plunge down to 2,500 if the big equity markets take a big plunge. But the other thing to worry about too is Bitcoin. Now, I don't think the rest of the world is buying Bitcoin. Bitcoin refers to the US dollar. That's all it is. It's like an OTC bulletin board stock where somebody owns all this zero cost paper, and then there's others who own a smaller portion of it. But you have to find a buyer for your Bitcoin in order to get the money that you need to buy things. And Bitcoin itself is not yet legal tender. And that's a scary thing. If Trump wants to make Bitcoin legal tender, can you imagine, you're selling your house and you're going to get $1 million and they're going to hand you $1 million worth of Bitcoin today, which tomorrow could be no bid. So if the cryptos undergo a major fall, that will have ripple effects right through the whole market. And that could take gold down with it because that's what happened in 2008. Gold was the most liquid asset, and the rest of the world will be sitting there buying this gold. So I'm not afraid of gold dumping to 2,500. In fact, I think if it happened and then stopped there, that's still a substantial 50% real increase for the price of gold and still very meaningful. For example, Vista Gold, when I run the numbers at 2,500, it's way in the money. It's nowhere near marginal or anything like that. So it doesn't really matter what happens to gold next, so long as it doesn't do this, back below $2,000 where everything's a wash in terms of profitability.
Great points on gold. I think that's important to go over there. And you mentioned with the gold juniors, we're kind of waiting. We're seeing some interest and movement in the producers. We need to wait and to see it come down to those smaller companies. I'm wondering if we can also talk about the health of the juniors sector as a whole, because I know that's where your focus is, and it's good to get your thoughts there. Before we turn the camera on, you're talking about some of your concerns, the problems that juniors are facing, and mentioning this extinction threshold. So I think that's a good point to take a look at here.
Yeah, I have a statistic where I track the percentage of the Canadian listings trading in the different price ranges. And the most important one is the percentage trading below a dime. And going back to 2000, where my data goes back to, when we have had bear market reversals, they have always been very violent. You'll see some like 60% of the juniors are trading below a dime, and then boom, like within half a year to 12 months, it's down to 20%. We started seeing a reversal of the bear market last year, but it's been the shallowest reversal yet. And the problem is there's no money flowing into the lower echelons of the juniors. Of the 1,092 TSX Venture resource listings that I track, 45% of them have negative working capital. In other words, they are worthless and nobody's ever going to pay that back. It's going to be converted to paper. There's about $3.6 billion in the treasuries of about 40% of them. And that's the sweet spot where you want to look at. It's maybe like 450 companies that are worth looking at. The others are not worth looking at. Now, I also track the financing activity on the venture exchange. And yes, financing activity is better this year than last year. But when you look where it's going into $2 million or higher financings, which are in the higher price stocks. So the better, more advanced companies are starting to attract money. So that's a big positive. But in terms of number of financings in the smaller category, that is really, really low. So it tells you that this is kind of like a split market, very selective. But from my bottom fishing perspective, it's also really good because I've got now 111 companies in my bottom fish collection. These are companies that are all missing one or more pieces. One of them is money, is sufficient capital to do something important. But these are companies with competent management teams, ones that are interested in creating new wealth by discovering something. And again, we're talking about the junior exploration ones as opposed to the ounce in the ground. The ounce in the ground ones are starting to attract the funding from the Eric Sprotts of the world, so high net worth investors are putting money into those. But the ones that are exploration plays, those are still having a really tough time attracting an audience. And I call it this catastrophic collapse of eyeballs for the resource junior sector. And that's played out over the last decade. The fact we've been in a bear market since 2012 with a few brief interruptions has contributed to the disappearance of eyeballs. The fact that with cryptocurrency like Bitcoin, you don't need to know a single fundamental thing other than that the trend is your friend and that there is a greater abundance of fools, people more foolish than yourself to eventually buy. That's all you need to know. You don't need to think. The resource sector is very, very difficult. You need to know about deposits. You need to know about the exploration development timeline. You need to have a method to value these companies, and it's event driven. You get a news release every 1 month, 2 months, sometimes 6 months, and then you have these waiting period. And the financial establishment, ever since they got rid of the uptick rule for short selling, they have their bots that come in there. Out comes a news release, in comes the retail buying. It goes up, and they then start short selling paper into it, and they have to borrow it, but not if they're flat by the end of the day. So they can continue. As the incoming capital dies down, they can continue to lean onto the bid side of the order book with selling stock that doesn't exist, which causes this cascade, this collapse of despair as the existing longs say another failed rally, and then they sell too, which enables the shorts to cover their shorts before the end of the day and not run into problems borrowing paper that simply isn't available for borrowing. So the sector, it's great if you know what you're looking for. If you're looking for good stories and management teams and looking for the ones that aren't negative, I see it like this harbor full of several hundred boats all moored. The tide is rising, but very subtly, and you're seeing individual boats put out to sea, and that's where we're having fun right now because I'm promoting them from the bottom fish collection to the favorites collection as they start getting their act together, the missing pieces fall into place. But I think it'll be 2027 before this bull cycle has reached the kind of when pigs and turkeys are flying again. So there's like another 1.5 years left of evolution for this bull cycle where people who are coming back to it, who are learning about it for the first time, have a chance to make money. And that's the plus side of this very shallow decline in the number of percentage below 10 cents. This is a market where you have a chance. It's not like if you weren't on board before the sudden reversal, you're out of luck, everything's overpriced. No, there will be many, many opportunities over the next 18 months to find ones that haven't left the dock, but where you can see the engine starting. And that's why I'm pretty excited after almost packing it in last year when I was totally despairing about this whole sector.
Well, it's good to hear that you're feeling a little bit better now. And I think this is a good point to ask you to share a little bit more about your strategy. So we've got all of these different things going on for the juniors. What are you doing right now? Can you explain a little bit more how you are doling out your money at this point?
Okay, well, first of all, I've changed my whole business model. I still have Kaiser Research, which costs $450 until the end of this year. Then it becomes this expensive $2,000 a year, $200 a month service. But that's a research platform. It's got all the companies in it. It's got a powerful search engine. It's really meant for family offices, do-it-yourselfers, and so on. But I've launched now a Substack version where I write and talk audio talk about the favorites collection. I've got 26 companies in there, and they are a wide range of companies. So instead of like saying, okay, here are my top 25, and because I love gold, they're all gold stocks. No, I've got all kinds of stuff. Nickel is in the dumpster right now, but I have FPX nickel in there as a longer term bet. And so I'm designing these bets as not just on individual company fortune, but also on big picture outcomes. For example, right now, the expectation is electric vehicles are dead, at least in North America. Nobody's going to need clean anything anymore because dirty is good and so on. For example, a Patriot Battery Metal Corp is in there. At the current lithium price, project's worthless, but in their PEA, it's worth about $3 billion using a price that's about 70% higher than it is now. But they're not going to be in production until 2028, 2030 anyways, so you have time for things to turn around. So there are now stocks like this where you can place a bet on the higher, on the trend turning around. And obviously, China now owns the electric vehicle future, and it's going to continue to expand, and it's going to sell to the global South nations. The Europeans are going to have to embrace Chinese vehicles, which will force their own domestic producers. And even within the United States, there's going to be the electric vehicle is the future. If Toyota succeeds with a solid state lithium-ion battery that gives you 1,000 kilometers on a 5-minute charge, gasoline cars are toast. They're finished. But that's not going to happen during the Trump administration term. So it'll happen later. In terms of like critical metals, Aclara is one of them that's done really well. It was sort of 35 cents at the beginning of the year. Now it's $1.20. Sunrise Energy Metals, which is Robert Friedland's scandium deal. They've turned after blowing their brains out on nickel, cobalt. They've gone back to the original biggest, richest scandium deposit in the world. And now they've gone from sort of 20 cents to about $1.20 now also. Like those two are the biggest performers in my collection. And what's changed is that everybody realizes China's domination of many of these critical metals like rare earths and scandium, on which it's imposed export controls. You're going to have to pay more than the China price to have a reliable source. And we saw that with this MP Materials deal that the Pentagon did, saying we're going to pay twice as much as the spot price for neodymium and praseodymium to guarantee a floor for that. And they've provided government funding. So the United States, and I think other countries are going to have to start doing this too, they're starting to be like China. China bankrolls its industries, and they don't even care that the rare earth producers make no money, so long as they're breaking even. They make their money downstream through the magnet production, which they pretty much dominate right now, but they also use it as a strategic geopolitical tool. So the rest of the world is waking up and starting to say, we have to pay higher for reliability of these key inputs. And of course, in my gold spectrum, I've got Vista Gold as my advanced, very undervalued gold project that will likely be taken out by one of the mid-tier companies. I've got at the opposite end of the spectrum, Solitario Resources Corp, which has perhaps the last major gold frontier in the United States with its Golden Crest project, which could end up being a mirror image of the 90 million ounce endowed Homestake region in the northern part of the Black Hills. They haven't yet got that discovery hole, but they're waiting for a permit in the one area where there's gold there that, because it's micron size, the prospectors from 100 years ago, they walked through and didn't find it. So something like that is there waiting to, if they get that discovery hole, it's 65 cents, 70 cents US. That's the sort of stock that could end up being a $50 to $100 stock because it controls 100% of a potentially entirely new and overlooked gold field. And then there's ones like Endurance Gold Corp, which has been working for years as Reliance project, done over 10,000 meters of drilling, slowly stitching together this orogenic gold system. they haven't been able to get the market's interest. They cannot get institutional interest. And this is one of the things, the institutional interest that really drove the 2000s, both the base metal super cycle and the gold cycle, they're not there yet. They're maybe getting back into the gold producers, but they're not here in this area yet. But these guys are going to put out a resource estimate. It's not what the project's about, because it's one of these things that will go deep for 1,000 meters and be an underground mine. But at least it'll be numbers there that a fund manager, when he has to or she has to explain, why do you own this stock? They say, well, they have these 500,000 ounces here, and this is the starter pit, and they keep going to keep growing and growing it. So they're doing that to try and coax in a different, audience than what's that. Because the retail that's left at the moment, they're kind of all in already. The other ones are gone. They do not yet see that, ignition of this sector that makes them rush in the way they used to in past cycles. And the biggest groups are the Gen Z and the millennials, who really know absolutely nothing about this sector. They never even had a chance to lose money in it, except for the odd one that accidentally strayed into it in the past decade. So that's why I'm on this educational role to teach them about the rational speculation model, how to quantify the size of the prize, and how to assess the current pricing in the market as good, fair, or poor speculative value, which is back in the earlier decades, I didn't know how to do this. We were all just being like Bitcoin traders. Oh yeah, it's going up. The results are coming. They're going to keep coming until they don't. And the pros, of course, would all sell into the S-curve frenzy. We don't see that much S-curve frenzy anymore. And that's really the key to this sector, is when a new discovery arrives, people start saying, oh, wow, what's the limit for this price? How big can it get? And that's where you get the debate. Well, is it going to be $1 billion prize, $2 billion, $5 billion, or is it going to fizzle out as a nothing burger, not worth anything? And that's what always used to attract the speculators into this sector. But what I think is going to be really key is, with chasing Bitcoin or Tesla or any of these other knee bender tech companies, the trend is your friend until it's not. There's nothing to really know about any of these companies. Everything that can be known is in the public domain. These are highly efficient markets. The resource sector has become extremely efficient because the collection of eyeballs out there that knows how to think about it has shrunk. So this is now an underthought sector. And because it's event driven, you don't have to it's not a daily trend type of thing. It's okay, here's the news event, here's the drill program coming up. We're going to have to wait this, but you can get your head around, what does the geophysical survey look like? What do these results look like? How do we stitch it all together? It becomes a thinking person's game where you're betting on the staged fundamental outcome. And what's missing right now is the anticipation cycle that used to make it fun in the 80s, 90s, and even partly into the 2000s.
I think that gives a really good idea of how you're focusing right now, and totally agree on the importance of education. So nice to hear that you're doing all of this work in that regard. We covered a lot of the topics that I wanted to go through today, but before I let you go, are there any final thoughts you would leave investors with, themes that you're noticing right now?
The base metal trends and that are not super positive. And as this all these tariffs start to kick in, we may see a global economic slowdown. China has been unable to really get domestic consumption going. So it is a bit of a drag. Also, it needs to really liberate its own people and get them buying stuff to take the pressure off everybody else. So in terms of the base metals and that, look more at the exploration side. Don't play the pounds in the ground optionality game. In terms of jurisdictions, Africa's now a no-go zone for juniors. Australia, of course, is its own world, well explored by its own thriving culture, where the government actually supports it. Unlike Canada's, where they do not support it, Australia has not signed on to UNDRIP the way Canada did. When Canada did that, it basically ripped the rug out from junior exploration and senior development by basically handing 3% of the population a final veto on any resource development decision. And this British Columbia is now a no-stake zone since this new staking rules came in. And everywhere else, all these consultation cycles and that, they are really slowing down things. The United States is really the place to look for exploration. Although the changes at the BLM and the U.S. Forest Service has been slow, there is a noticeable difference in attitude. The hugely bad thing about the United States has been the huge NIMBY blockade, this army of lawyers and anti-mining people, bankrolling opposition to permits, even exploration permits, such as Solitario, hoping to get its Ponderosa application approved by September so it can get a drill program done before snow shuts down that part of the Black Hills. This idea, this arrogant sense of exceptionalism, which we mine stuff elsewhere, we don't want to mine stuff in America, that is now under siege. And by the policies of Trump basically alienating the rest of the world, slapping a 50% tariff on Brazil. I mean, what's the point of that? They have the United States has a trade surplus with Brazil, just so that his buddy Jair Bolsonaro, his insurrection pal, he's unhappy that this guy's being prosecuted the way such people should be prosecuted. This sort of bullying is alienating the rest of the world. So the pressure to look for resources inside the United States, even if suddenly there's a turnover and the Democrats are back in charge, that's not going to go away. So juniors that are focused in the United States, where you do not have this First Nations blockade problem that you have in Canada, that's going to be something that I'm focusing a lot on.
Okay, well, I think that's a great place to wrap it up. Thank you so much for coming on to go through all of these topics. I think this was a great discussion.
You're welcome, and thank you for having me.
Of course, and we'll make sure to have you back again soon. For now, I'm Charlotte McLeod with investingnews.com, and this is John Kaiser.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.